How to figure out if a stock's dividend is overvalued or undervalued. What up YouTube? It's Jermaine back with another video, and in this video we're going to talk about stock market investing, but we're going to talk more about dividend investing and how to figure out if a dividend stock is overvalued or undervalued. And this can be very, very helpful if you are looking to purchase dividend stocks for the long term. If the share price dips, it may be a better time to purchase those shares if the dividend remains the same. And also, if this company continues to pay a dividend over the course of many, many years, this could be very, very beneficial. So first off, guys, I'm going to show you different yields on pretty much the same stock at different prices to show that if you got in at this price, this will be your yield. If you got in at that price, this will be your yield. And then we're going to go over to Yahoo Finance and look at some statistics and some past data to find out if this stock's dividend is a good deal, see if it's overvalued or undervalued. We're going to do all that. So what I did here is I made an illustration here on the whiteboard. Let's say you're looking to purchase a dividend stock and this dividend stock is trading at $40 a share. Let's say the dividend is $2 per year. This means you will receive a payout of 50 cents every quarter or every 4 months to equal $2 a year. If you purchase at $40 a share and the dividend payout is $2 a year, your dividend yield is 5%. Okay, let's say you have $1,000 to invest with. 5% of $1,000 is $50. So you can purchase 25 shares at $40, and with a payout of $2 per year in dividends, you will have $50. However, let's talk a little bit more about the dividend yield, because I think this could be lost in translation a little bit, because when you look at a stock, you can see the dividend yield at one price, but that's at that particular time that you look at that stock. And then sometimes you notice that the share price is down and you're wondering, wow, why is the dividend so high? So let's look at this example right here. Now for our long-term investing portfolio, we're looking at different share prices. Now for this first example, the stock is $40 a share and it has the $2 per year dividend. Now this equals 5%. Now let's say the stock price fell and it's now $30 a share with the same $2 a year dividend. Now the dividend yield is 6.6% now. Now that's a little bit better. Now let's keep going down. Now the stock price is $20 a share. Now you're looking at a 10% yield with the same dividend. That's if the company does not lower the dividend. Now let's say the stock price fell all the way to $10 a share, and the company is still paying a $2 a year dividend. Now you're looking at a 20% yield if you invested $1,000. So these numbers can look really, really good if the stock price fluctuates and if the company continues to pay the same dividend. Now let's look at the different yields and the different payouts. Okay, so now we see that at the 5% mark, we're getting $50 a year in dividends. Now at the 6.6 yield, at $1,000, we will receive $66 a year in dividends. Now at a 10% yield, we're going to receive $100 a year on a $1,000 investment. Now at 20% a year, we're going to receive $200 a year off of a $1,000 investment. Now for all my visual learners out there, let's look at this on a graph. Now let's imagine every quarter we bought $1,000 worth of a particular stock and it paid a $2 a year dividend. Now if you guys look at this graph here, you can tell in the middle of Q1 and Q2, the price fell quite a bit. So if you would have purchased shares at that dip, looks like that's in between $20 and $10. We'll just say $14. If you would have purchased the shares at $14, you would have had a much better yield throughout the rest of the year, because towards the end of Q4, we can see that the stock price is now around $40 a share. You would have did much better in the quarter between Q1 and Q2 because the share price was at a lower amount and you're still getting the same dividend every year. Now, if we look over at Q3, the share price is a little bit higher. It looks like it's around $30 a share. It's bobbing and weaving, maybe going up to $35, and then in the middle of Q3, you see the share price drops down to, let's say $25 a share. Now, when we just look at this graph, if you are the type of investor that you purchase shares throughout the year, you're going to have completely different yields on the shares that you purchase. So when you look at a dividend yield on a stock, it may not look so attractive if you buy it today. But if you buy it today and hold it for the long term and the actual share price continues to go up, the yield will go up too. Now let's take a couple stocks and let's go over to Yahoo Finance and let's see out of the two companies which dividend is overvalued or undervalued. Now, one of the two stocks that I picked for this demonstration, one is Ford Motor Company, the other one is McDonald's. And what I did was just went to Yahoo Finance, just typed in ticker symbol F for Ford, that's the ticker symbol for Ford. And here you can see all sorts of detailed information about Ford Motor Company here. But we're gonna click on statistics here, and then we're gonna scroll down to dividends and splits. Now, as you guys can see, the dividend yield right now is at 4.95%, so that's roughly 5%. Not bad, not bad. That's pretty high for the most part. That's pretty good dividend yield. And as you can see below, this number is what we want to pay really close attention to. 5-year average dividend yield. And this number is 3.58%. So basically, if you want to tell if a stock's dividend is overvalued or undervalued, this is one way you can easily tell right here. You just go over to the stock's statistics and you look at the 5-year average versus the current dividend yield. And if the current dividend yield is higher, like in this case, the current dividend yield is higher than the 3-year average, this is undervalued. So this wouldn't be that bad to jump into. This is if Ford Motor Company does not lower the dividend. If they continue to increase the dividend over time, this won't be bad. Also, this does not guarantee that the stock price may not fall more. If the stock price continues to fall, you could actually purchase more shares and hope that the stock price goes up someday, especially if you are in this for the long term. That may not be a bad option. This is the first one here. This one looks like it is undervalued. So if I'm looking to collect dividends for the long term, Ford Motor Company may not be a bad choice. Now we're going to go over to McDonald's. The ticker symbol is MCD, McDonald's Corporation. We're going to click on McDonald's. Share price is a little bit higher than Ford Motor Company for sure. And I'm not comparing these two companies like head up, like you should buy this one or buy this one. I'm just, picking older companies that have been around for quite some time. And let's click on statistics here for McDonald's. We're going to go down and look at this yield. Okay, so right now, you see here Ford has an annual dividend yield of 2.58%. As we can see down here, the 5-year average dividend yield is 3.9. So McDonald's looks like it is overvalued. So if you were looking to invest in McDonald's for the purpose of dividend investing, right now it's pretty overvalued. Now this could change if the stock price falls a little bit, but right now McDonald's is looking like it's at the top of the market. Let's look at the 1-year chart. Oh yeah, look at that. Yes, this one may not be a good one to make money off of dividends. This may be just better to make money off of the stock price going up, because as you can see, the stock price was $113 a year ago, and now it's at $165. So yeah, McDonald's may not be a good one to jump in for long-term dividends, because you're looking at an overvalued price. But if the stock price, makes a correction and you're able to buy a handful of shares, you get a better price. But if we look at the 5-year chart, yeah, McDonald's has just been climbing. So this may not be one to jump into for long-term dividend investing. However, Ford is not bad. Now, I don't recommend that you purchase any shares. I'm just using these two companies as an example, but yeah. Ford for the 5-year chart is looking, it's looking more like on the downtrend. I guess that's why Ford is giving out that 5% dividend so they can attract new investors, because it looks like over the past 5 years, their price has just been falling and falling and falling. However, that could change. Who knows? You know, in the next 1 to 2 years, Ford could release a new automobile and the stock price could go up to, $30 a share. So if you bought them now, you would have a much better dividend yield in the future. But who's to say that this price is going to rebound and go back up? Guys, I just wanted to make a video and talk about dividend and yields because I feel that it's kind of hard to explain. And if you get in at the right time, you could have nice yields. And one thing about dividend stocks, this is money that's paid to you every quarter. So if you invest like a nice amount and over time you continue to reinvest that amount and you continue to add to that amount, you'll get to a point where the payouts you receive, you could almost live on them if you would do this over a very long period of time. And I'm talking about 10, 15, 20 years. You could really receive some pretty serious dividends like every quarter. And who knows what you can do with that money. You can reinvest that money. You can use that money to just do whatever you want. How to figure out if a stock's dividend is overvalued or undervalued. This is like super important if you are a long-term investor. This could save you a lot of money if you got a hunch that this stock price is gonna fall and you can get it at a discount. Well, yeah, you can definitely get the shares at a discount, but then you can also have a really, really nice yield that could just only increase over time, especially if those companies continue to pay out the same dividends or if they continue to increase the dividends over time. This could really, really, really change your financial future. So guys, thanks a lot for watching. Like, comment, subscribe if you're new. Definitely hit that subscribe button. I got more investing videos and more random vlogs and stuff like that on my channel. But for now, thanks a lot for watching. Like, comment, subscribe. Peace out, yo.